The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour. I am your host, Darrell Martin, and glad to have you on the show today. So, really interesting evening that we had, and of course, we got Apple's announcement coming out right now. So, should see some interesting things on that end as well. And let's see here what we got coming up on Apple. I'll be watching that basically while the announcement's coming out. Looking for the iPhone 5, possibly an announcement of the iPad Air. So basically it's a mini iPad to compete with the Kindle Fire and the other smaller tablets that are out there. So we'll be seeing how that goes out and plays out for the day. And but it definitely will be a volatile hour probably here for Apple, and or next couple hours, depending on how long their total meeting takes. Well, let's go ahead and do a market wrap. We'll talk about the fundamentals of what happened last night with the German Constitutional Court, and we'll get into the details. So let's check it out. We got the S&P E-mini futures are up 8 points right now. We got the Russell up 5. We got the NASDAQ up 15. And that'll be carried up even further, of course, by Apple. And we got the Dow up 64 points on the day. We got copper. It is down 0.0075, so just a 0.2% change on that. Gold is pretty flat on the day, only down a point on the day. And we got silver down 1%, down 0.456. Looking over at natural gas, we got it up 0.035. That's a 1% move on natural gas. It has just been a mover and a shaker lately. And looking over at corn, we got that one down 7 points on the day. Going over to the currencies, we have the Aussie dollar up 29 pips. We got the euro up 36 pips. And we got the pound dollar up 38 pips. So, pretty, not quite a volatile day just yet. But, it was definitely an interesting night. And so I want to go through and just look at that and see sort of how everything came up. And first thing I'd like to check out is we had the Constitutional Court ruling that came out last night. And they released the ruling at 3 o'clock Central Time, 4 o'clock Eastern Time, and 10 p.m. or 10 a.m. their time is what that would be. And so it was a very interesting announcement. Basically, they didn't give really a verdict, okay? They gave a sort of. So they didn't say, yes, it can proceed through as written, and they didn't give a no that they're going to basically, enforce the injunction on it, not allow it to move forward. So what they did do is they said it can move forward. We'll issue our final ruling later on it, and no matter what, if it is approved, it has to include the ability for basically a German vote, the German representative to be able to vote yay or nay on whether or not the bailout funds can be used, and that Germany has to have its contributions capped at $190 billion without an additional vote to increase that amount. So, again, basically they gave a sort of, but it wasn't just an outright, no. So what happened was they came out, market, spiked down real quick, a lot of automated orders going on right there, and then it started to rise and rise and rise. And as the news got digested that this was not a yes, then the market go, wait a minute, this is a sort of. And so it just sort of leveled off. And you can see that right there on the euro dollar, so being one of the biggest impacts. And, definitely a strong move for the euro and a strong move for Germany in some ways. I mean, they're basically consigning themselves to serfdom, but they put some things in there to make sure that they're not just to have unlimited liability on that process. So, with that, with that, we got a lot of different things going on. But one of the things that they did was, Germany has become one of the world's leading economies, and they'd be down at like 12 or 16 if it was just Germany with the mark. But they really want to preserve the EU and the euro because as a combined, whatever you want to call it, economic entity, the EU, they, rise up to being in that, top 3 spot with the China and the US. So it is in their best interest to keep that top spot and that economic spot. Germany does have some, bad things looking at its end. It looks like they had a lot of boost, but since all the countries have been suffering so much in the south of Europe, that they're going to have a lower GDP, which is definitely going to affect them, and they'll probably get downgraded. So what does this announcement mean for the Fed funds rate? And that, of course, is the question of the hour. and really the question, I guess, of the month, right? And so on the Fed funds rate, Bernanke has, several ways to go. He actually probably has one of the easiest ways he can do right now is he can go sort of, because he just said, hey, if we need to step in, we will. Well, this being a positive move for the ESM not being hindered completely by the ability, by not enforcing the injunction on the ESM movement, then he doesn't have to be as concerned about the continued ongoing EU crisis. I'm sure he'll mention it, but he'll also mention how they passed the unlimited bailout funds that require, of course, the countries approve, the austerity measures that are given to them, and they have to request it first. And so far, Spain being the biggest one, Italy and France being the other two, having over, basically $1 trillion in debt there. It's bad news. At the same time, those countries have said that they don't want to approve those austerity measures. So he's given him the perfect out of, hey, I did everything I could. It's not my fault that we can't move forward. And, we talked about that. But, with that announcement, that's not how people read it. They just read it as, hey, he said that, yeah, they're not going to put these limits anymore on everything. But they have to have the money from somewhere. And Germany's already capped its limit without a vote. So the constitutional thing further reinforced that. And so it's going to be really interesting to see how it plays out when those yields do spike and those countries don't agree. But so we got that big movement. We also had, of course, Bernanke getting the QE without even having to do QE by simply having a press conference. And so that QE is already built into the market. So if, he passes it, I'm sure the market will rise. I'm not sure if it'll take off or not, but it definitely will rise. It'll probably have a bit of a launch, and then it'll slow down. And here in a couple of weeks, we're going to go into the next round of earnings. And earnings season does rise the market. Why does the earnings season? That's a seasonal part of diagnostic trading. Well, with earnings season, what happens is the 401k manager, the mutual fund managers, they're expected to mirror the performance of the market. The market's doing well, they're expected to do well. If the market's doing bad, hey, that's okay. The market did bad, you did bad. So they're not expected necessarily to outperform the market in a down market so long as they're mirroring the performance, trying not to underperform is their goal. And again, it's not positive performance, it's equal performance, as close as possible. So what they do is they make sure they load up ahead of these earnings announcements, and they put all the money into the stock, so that way if they do shoot up, they don't miss out on the rally. And so that seasonal cycle, you'll see it. If you go back and look at the seasonal cycles right there at the beginning of each quarter, you'll see all that money starting to flow, and it'll do sort of a pullback, and then it'll start flowing in. And so we ought to be seeing that. And, of course, then we're going to go into the end of the year. Usually has a nice little rally if nothing major comes up. We'll be having, of course, the Santa Claus rally at the end of the year. We'll be having the rally that usually starts right after Thanksgiving. And a lot of times the rallies will even begin as early as October, mainly due to that seasonal cycle of the fourth quarter earnings announcements. So be looking for that. And so what about Bernanke? What about, what is he going to do tomorrow? Well, if they would have struck it down, then that would have been a major blow to the euro, which would have gave a lot of strength to the dollar, causing deflation. We didn't really get that major deflation move that he, really needed. We also didn't get the major, bad news out of Europe that he needed. And so since we didn't get either one of those things, he isn't necessarily pressed to do it right now because the market's already rising. The jobs reports, of course, are coming in, worse than expected, so that gives him an out. And, inflation is not, of course, out of control yet. And so that has, definitely got, a bearing that he can, take advantage of if he wants to move forward. My guess is what he's going to do is he's going to say, sort of, just like the German Constitutional Court did. He's going to come in and say, well, we're definitely going to extend rates, and we got our finger on the trigger ready to pull for QE3 if the market warrants it. And he'll say, the EU crisis is still, there and fresh, but drastic moves have been taken recently. And he'll say, so, as long as that stays true, unemployment, has not been good, but overall, the major issue of unemployment he'll probably put off on Congress and say Congress needs to act. They need to avoid the fiscal cliff. And they need to get the debt ceiling taken care of. Well, we know they're not going to get any of that taken care of before the end of the year. So, they're not they haven't agreed on anything for the last 2 years. They're not going to start right before election season and basically, make their bases mad. So the chance of any of that happening, but he can blame a lot of that towards Congress versus, will quantitative easing really fix the problem? If the markets are rising, EU is settling down, and is, unemployment is not necessarily going to be affected by QE. It's going to be affected by the government's getting out of the way and putting some stability in place on future decisions. And so I think he will put a sort of in there. He will let that hope stay alive, but I don't think he's going to pull the trigger and launch QE. Either way, I'm going to be straddling this puppy, okay? And we'll be putting straddles on. And before the announcements come out, and they are coming out tomorrow, there'll be several series of announcements related to the Fed that are going to be coming out tomorrow. And so just so you know what those are and what times they come out, we'll be looking at, of course, the FOMC statement and Fed funds rate will come out right at 11:30 Central, 12:30 Eastern. And so that one's going to be coming out, and that'll be coming out right before the show, so we'll be able to talk about that live while it's going on. And then they're going to give their economic projections at 1 o'clock, which is noon Eastern, so that'll be happening while we're on the show. And then the FOMC press conference, which is going to be a big piece. That's where if they're going to be announcing, details on QE and why and what and everything else, a lot of that's going to be in there where you can be answering direct questions. Of course, it'll be in the statement, but a lot of it's going to be mainly in the press conference. So you want to be looking at straddling, of course, before the FOMC statement, before 11:30 a.m., 12:30 Eastern time, and you want to be looking at possibly straddling before the economic projections and press conference comes out. So that'd be another time to get in, one of those two. And you can even use one and see if he backs it up with this press conference. But everybody will be analyzing every word he says to see what is he going to do, why is he doing it, what outlook is he giving, and how much hope is there for QE actually going into place. So just be ready and trade with definite caution, and make sure to limit your risk on your trading. And so when you're going to do that, you want to hop over. And by the way, if you have any questions, go ahead and give you that number right now, 877-927-6648. Again, that's 877-927-6648. And I want to go over a few things with you. One is if you don't have a Nadex account, hop on over here and click on the Nadex banner. Then click on Create Account. You can literally set up an account. Somebody told me last night they literally set up their account and funded it within less than 5 minutes. So from start to I can trade. And they placed their first trade last night. So, you can hop on there that quick and set up your account and get it going. You only have to put $100 in the account, and you can actually do an e-check, and what they'll do is they'll give you a credit of up to $250 while they're waiting on that check to clear, so you can get started trading right away. Now, in addition, you want to have a demo account. Even if you fund a live account, you need a demo account to test things out. So go here and make sure to open a demo account. It takes about literally less than 15 seconds. Depends on if you type slow, 15 seconds. You put in your username, first name, last name, phone number, and email address, and hit apply for demo. Instantly, you'll get an email sent to you that's going to have a password in it. If there's an O in it, it's a 0, not the letter O. And then you can hop over here. You can click log in, and you can start trading this. So, just for fun, you may want to just on the demo account, do a straddle on the binaries or the spreads for the FOMC, statements, the FOMC press conference tomorrow. We'll be throwing some trades on, looking at some setups, and you can definitely check those out, follow along with the demo account. It'd be a great time for you to get started and just checking it out. The market's a new era, new markets, and it's time that you upgrade and trade up to a new product. You can still trade the futures like you trade them now by using the spreads, or you can go into a whole new area with the binaries. And we're going to talk a little bit about both of those when we come back. Stay right there.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I want to go over a few things we got coming up that you should definitely take advantage of. One of those, we got the free live workshop sponsored by Nadex coming up here at the end of the month from 8:30 to 12 in Tampa. It's going to be held at the Grand Hyatt. And you can definitely take advantage of that. Like I said, it's free because Nadex is sponsoring it, so we really appreciate Nadex sponsoring that. Again, that's 8:30 to 12 if you're going to be in the Tampa area. Make sure to hop on, and on the homepage under Free Live Workshop, go ahead and just click on that right there, and you can fill this in and reserve your spot. We do expect it to fill up, but you do have to reserve your seat. It is free, but it is limited. So make sure to go ahead and take advantage of that. You're going to get 3.5 hours of good, solid training. We're going to go into Nadex and how it works. Tommy O'Brien's going to be going in and talking about identifying the trend, and he's going to be going into setting up trades. I'm going to go into diagnostic trading, technical, fundamental, seasonal, and a lot of it, what I'm going to be focusing on, of course, is just the Nadex spreads and binaries and how they work. And we're also going to be going in, me and Tom are going to be tag teaming on some trades and looking at risk and, money management there. So that way you can see that and you can ask questions, and just definitely want to take advantage of that event. So hop on there, do that. The other one is we got a big bonus going on right now. If you see Last Chance, what you'll see is get a 20 to 30% bonus right there on, again, the TFNN on the left side. Click on Last Chance. And what you'll see is that you have until a limited time, you got until September 16th, and you can get between a 20 and 30% bonus on your Tiger Dollars. So what are Tiger Dollars? Well, let's say you buy $500 in Tiger Dollars, you're going to get $600 worth of Tiger Dollars to spend on anything thing you want to spend money on. Okay, so any of the different events that we have, any of the newsletters and things like that, so you can take advantage of the Tiger Dollars, and you're also going to get access. By taking advantage of this, access to the 5-hour live trading workshop that Tom O'Brien's going to be doing. He's going to be trading real money and might even be pulling out some Nadex spreads. So just depending upon the setups and how everything works out, that's going to be on October 5th. So again, but you can't wait till October 5th. You got to take advantage of this to get access to this big bonus event. Get in, hop on, grab your Tiger Dollars. The deal ends September 16th. And you literally can get up to $350 in free buying power on any of your TFNN subscriptions. So whether you're a current subscriber or you're, brand new, been thinking about it, this is the time to take advantage of that. So you can use those Tiger Dollars on whatever you want to. And all the details are on the page. Definitely check it out. But they have all different sizes. They can fit your needs in any way that you want them to. But it's a great deal that you definitely should check out. And if you're curious, if you don't know what I mean, hop on there, read it, give us a call, whatever. We'll be happy to help you out. But there's a lot of stuff coming out. And again, Tom's got that awesome workshop, that 5-hour workshop coming up on the 5th. I can't wait to be on it myself. And the free live workshop's going to be great coming up here in a couple weeks, live in person. Bring your laptop, show up. And if you have a laptop, if you don't, that's okay. You don't have to have one. But if you have one, show up, bring it, and get your Nadex account before you show up, or sign up while you're there, either way. And we are going to get you going. But the sooner you get on Nadex, the sooner you can start learning and you can follow along with us. So, anyway, some great events. We're always trying to bring you great trading education right here and helping investors and traders learn how to trade the markets and hedge their risk, and just put everything together in general. So, with that in mind, I want to go over and I want to check out some different Nadex trades and show you how they work, and just let you know, what are some of the things you do? How do these Nadex instruments work? What do they do, and what does it mean to trade on Nadex? Well, Nadex is the North American Derivatives Exchange. It's in Chicago, and it's registered with the CFTC. It is the only exchange in the country where you can trade. Actually, it's the only exchange in the world where you can actually trade binaries. Everywhere else, you're trading these, over-the-counter trades with these, basically companies that are out of the country that are not near as regulated and are not registered with the CFTC. And so that's the big advantage of trading with Nadex. And Nadex has also done a recent thing. We talked about this on one of the shows the other day, where they cap their fees to $9. So it's only 90 cents per contract. Okay, and so 90 cents in, 90 cents out. Now, if let's say it's a losing trade, it expires out of the money, you have to loss on that, and you let it settle, then there's no fee on the exit side. So it's only 90 cents on one side. But what happens if you want to do 20 or 30? And some of these contracts cost $4. I put some trades on last night where they were $4. Okay, so you go in there. Well, if you're doing like 30, 40, 50 contracts, 90 cents could add up. But the nice thing, it doesn't add up because it caps at $9. So it definitely can save you money. And it's sort of funny because I talk to some people that are like, wow, well, I don't know. 90 cents, CME charges more than that. All right, for a futures contract. But some people are looking at it, and I'm like, you're sort of missing the forest through the trees. On the things. This is a great benefit for you, but the big benefit is not simply the fees, okay? You're getting the live data feed, you're getting the platform, you're getting all that stuff, but the big benefit is you're getting limited risk, okay? So if you want to go in and you want to trade, say, the S&P E-mini futures, and let me pull those up right here on the chart. I'm going to show you how you can trade those and have a limited risk. That is the big benefit of trading on Nadex, and we're going to go into that on the next segment. We're going to go into the bull spreads, and we're going to touch on the binaries too before the show's over. So make sure to stay tuned so we can talk more about that, and you can learn the benefits of trading on Nadex.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, here we are back on. And the iPhone 5 is official. It is out. It is coming out. And it is going to be smaller, thinner, wider. So basically you have a 4-inch screen. You can put 5 apps across instead of just 4. And it's going to work on, I believe it's going to work on the 4G LTE. So I'm trying to get all the details on that now as everything's coming out. And just, on the show. So have a little bit on that. But, Apple definitely not taking off at all. Shot up, shot down, shot back up, and flat. So basically the expectation was there, and it met the expectation. So I guess good for Apple on that mark. And then if we go over, one of the things I like to look at over here is I'll add in something really simple. It's called implied volatility, right? I use that all the time in all sorts of different things. And we go in and check it out. And expect this number to be dropping off a lot, unless Apple just declines. I mean, it gapped up and fell back down. That's basically where it closed yesterday right now. But the implied volatility should drop. The options should lose a lot of their premium value after today. So anyway, so checking that out right there. That's your quick Apple update. And we wanted to go in, euro dollar sort of staying flat. Everything is staying flat. Everything's coming up to waiting on what's Bernanke going to say, what's the Fed funds rate, what's the meeting announcement, what's the what's going to happen. So with all that in mind, that's never A good idea is to hop in like crazy, but definitely if you are going to hop in, if you want to do something, then check out Nadex, like we were talking about before. So when you open up Nadex, you're going to see the master spreads. What are the master spreads? That's the widest spread of the day. It's a great thing to use also if you're looking for a chart. And let's say you don't have charts. You can pull that up on the master spread, and you can see the details of that. And it's very helpful for seeing charts without, like I said, actually having them. And you can back up. You can look at all the data, basically from whenever they started trading to now. And gives you a very simple, easy way to access, futures data. It's not going to be exact, okay, but it's going to be very, very close. For instance, right now, the S&P is trading at 1437. That's at 1437.1. It actually, on the US 500, actually ticked, oops, little error there. It actually ticks a little tighter than it does on the S&P E-minis. So, like that quite a bit, but you can take advantage of that, and if you're ever trying to figure out what the underlying market's at, then keep that master spread list up for you. Now, how do these spreads work? Okay, I'm going to go to the summary of the spreads, and I'm going to go into a summary of the binaries. So just sort of a refresher if you're new. If you've been trying to figure this out, you haven't quite got it, just want to go over a summary of them and make sure you do understand what they are and how they work. Well, let's go over and let's pull up the US 500. So I click on US 500, and then I got to click on the word daily, okay? When I click on the word daily, it'll bring up all the spreads, and these are the spreads that are going to expire at 4:15, and they're the widest spreads that are tiered. There's the master one, that 800-point wide one. It's always the widest one. That one won't be tiered, okay? So we got the daily, and we can move that down even if we want to keep our watch list up so we can keep an idea on this. And there's different things you can do. Let's say you're not really wanting to use this for anything but a price list. You can go to your master spread list, and you can go to click against pairs and to see the price right there. So that's sort of a cool, handy little feature that you can take advantage of. But if we're looking at this and we're looking at, okay, where is the market trading right now? Do I like these spreads or, not? Well, they're not bad, but they are about 7 points off of where the market is. So the market's at 1437, and these are at 1430. So ideally, we can get a little bit closer. There we go. We got a 1435 on the 300-point wide spreads. So that's a good trade. That's a good setup. So if you want to go and let's say you want to buy the S&P, and we're looking at the S&P chart right here. You want to buy the S&P. What happens if you click on buy? Well, if you click on offer or buy, you buy it. If you click on bid, you sell. Okay. So if I click on offer to buy, then it's going to pull that up, and I can choose my quantity. All right. As soon as I put a quantity in, it's going to tell me what my profit and loss is automatically. It's going to calculate it based on the price I have in here. Now, let's say like right now the market has moved up to 1438.4. So if I click on that, it'll update it to the current price, and I can put it at any price I want to. Okay. Now, one thing that's really important is something called market orders and limit orders. On Nadex, you're submitting limit orders. So if I say I want to buy lower than where the market's at right now, it won't fill, because a limit order means at this price or better. Well, obviously, I can't. It'd be great if I could, but I can't get a fill at 1437.3 when the market's at 1438.2. Okay, for that box spread. So I need to make sure if I want to get filled now that I'm putting in at the market price, but it's a limit order. All right, and go over here. So what does this spread mean? Right here at 1438. So I mean, we're really close. We're not paying a lot of premium at all. You're talking about a couple ticks of premium, and the advantage is that it doesn't matter what happens with the spread. We won't get stopped out of the trade. So if I go over here, and pretty much every platform out there has the ability to add drawings, such as rectangles or squares or whatever, but usually it says rectangle. And then I go over here and I go, okay, well, I want to draw this thing, and let's see, let me draw it. There we go. And then I can click on it to edit the actual drawing there. So go on and say, hey, I want to edit this drawing, and what I want to do is I want to make it the same size as the box. So 1435, okay, and I want it to go up to, and see, we got 1435, or we got the floor 1435, we got the ceiling 1465. So I want to go up to 1465, and especially when you're new, I still do it, but especially when you're new, it's great to draw these boxes on the charts. Helps it make so much more sense, okay? And then also I'll make it expire. When does this thing expire? It expires at 4:15. So I can go on here and I can say I want this to expire at 4:15, which is 3:15 my time, okay? Or would be 15:15 military time there. I'm central, so I got to put 15:15 for 3:15, and then click OK. And so now I got the box on my chart. All right. And so this box actually will extend and will go all the way out. And there's different things you can do on your charts. You can go into the settings, and I believe you can extend it out to the right side there. Let's see here if it'll let me do it on the access and, yeah, the expansion area. And so if I go over and hit, like, apply, that's a little bit much, I guess. Let's do, like, 20. There we go. Still, let's try 30. Okay? And that basically just extends my chart out, allows it easier for me to see what's going on with that chart. And I can put it out even further if I want to, but the box will basically draw all the way. And I'll do it one more time just so we can get it right at that expansion area. And time access here, let's go ahead and try 40. And because I like this, there we go. So now I have my box, all right? And on my box, I can go in there. There's a lot of different ways you can take advantage of this. But I can get in right now. I can buy this box at 1438.2. And sorry about that. I think for Apple, it started playing. So I can buy this box right here at 1438.2, and it allows me to limit my risk. So if I bought the market right now, 1437.5, well, I could limit my risk. I could just put in a stop loss. Right, but you get stopped out of your trade, okay? So I go in, and I'm buying just a couple ticks, and now let's say the market goes down to 1430. All right, very possible, right? And then it, floats around, and then all of a sudden it comes back up by the end of the day. I can still profit. So I have time to be right about my trade. Again, time to be right is huge, and that's what it gives you. It gives you the ability to have that massive leverage, but time to be right. And how much do I make? Well, I make $1 a tick, and on the US 500 NADEX spread, it ticks in 0.1. So 0.1, 0.2, 0.3, 0.4, every tick is worth $1. Well, so a 1 point move, like from 1438 to 1439, would be a $1 move. That'd be 10 ticks. All right, so it'd be $10. Well, on the S&P E-minis, it's $50. And on the S&P full contracts, it's $100. The minis are worth half. That's why it's $50 in the S&P E-minis, and you have to be on the floor to trade the full contracts. So probably more than you needed to know, but just sort of filling you in on why, if you're new to futures, like why is it $50? So on the S&P E-minis, the ES contract, and again, this follows ES. It doesn't follow SPX. It doesn't follow the spiders. It follows the S&P E-mini futures. And so looking at this, I can go and go, okay, well, if it's $50 on the E-minis, and it's for $1 move, 1438 to 1439, and it's $10 on this 1438 to 1439, then I need 5 to make it equal. All right, so I can go over here and I can say, okay, at 5 contracts, then I'll basically make or lose. All right, $5 for every 1 tick move on the US 500. I'll make or lose $50 for every $1 move up or down. So with that, now I'm trading just like I'm trading the S&P E-mini futures, okay? The only difference is I'm paying a little bit of premium, so got about a point or less of premium in there, so $1, about $50 additional risk I have on the trade, but I can't lose more than, in this case, $150, okay? So on this trade, if we bought it in at 1438, I literally could not lose more than $150. Well, that'd be like having a stop loss at 1435 on the S&P 500. And so now you're going to have that same stop loss, but you don't have a stop trade. You can't get kicked out of the trade. And if it goes, up a point or two and you get out, then you can make $50 for every $1 move up. If it goes down a point, you could lose $50. But if it goes down 3 points, you can't lose more than $150. Okay? And you are still in the trade. So if this literally comes in here and goes down and comes back up, I can still make money. And I can also hold it to expiration. I can hold it to, the end of the day at 4:15 Eastern, 3:15 Central, and wherever it's at. Like, so if it's, let's say it's at the same price I bought it at. If I bought it at 1438 and the S&P is at 1438 when it expires, then I would just get my risk back. So it's great. It's just like, if I opened at 1438 and closed at 1438. I mean, yeah, you lose any fees, but you get the advantage, and that's the same whether you're doing futures, forward, stock, ETFs, options, NADEX, whatever. I get the advantage of trading like I'm trading the underlying market, a little bit of premium in there, but with the right to have time to be right. So I don't have to, it's the stress of trading that I get to get rid of. And I was talking to a lady today, and she was just talking about how much she loves it. She hadn't traded for years. And she's just got back into trading. She's waiting for her son to go to college. He went to college. And so she hopped back into trading and found out about NADEX and, trading along. And I've been listening in. And she's so excited because she's like, I'm trading for the first time in my life without absolute stress. And, just the in and out constant, of trading. And, why do people have stress in trading? Well, here's the problem. You get in. You have to be a wise, good trader. You have to put in a stop loss, right? Otherwise, you're a trader that's doomed for failure. And at the same time, doesn't mean you're going to win. And so like if it starts moving towards that stop loss, you are freaking out. Your heart's beating. You're like, okay, I mean, I'm not saying you're going spastic, but your heart races a little bit, and you're like, I hope I don't get hit. I hope I don't get hit. And if I do get hit, what am I going to do? Am I going to hop back in? Am I going to do another trade? If I do, I'm going to put more at risk. Am I going to go in the same direction? Or am I going to flip and go the other direction? Or am I just going to call it quits for the day? And because I don't want to lose more than this much per day, therefore I'm not going to trade anymore for the day, and then I'm going to watch the market just take off at the end of the day and miss out completely. Okay? So understanding that fact, I now can go in. I don't have to make any of those decisions. My risk is set. It's done. I got to pick the right box spread. $150 risk on this trade, entering at that price. And if it goes down against me, it's just like I got stopped out, but now I get the chance to hold on. And I don't move my stop. I can't be bad and move my stops. Okay? I can't, do the bad mistake of not having a stop and going, I have a middle stop. Well, that's mental. Because what happens is your mental stop becomes a stop that changes really easy. It's easy to play games in your mind, So you want to know what that stop's going to be before you get in, and you want to know what your take profit target's going to be before you get in. So you're actually measuring risk versus expected reward, not maximum reward. Okay, yeah, this has a huge reward potential. It's huge. It's $1,350 reward potential. I don't see the market spiking up unless Bernanke decides to come on a day early, spiking up to $14.65 before the day's end. All right, but if I'm only risking a few points, if the market moves up a few points, I'm at a 1-to-1 risk reward. What's the chance of the market being at 14.41 today? Well, it's not impossible at all. It's only a few dollar move. So, how high could it get? Who knows? It could go 5, 10, 20 points. I like to use the deviation levels. They help me a lot. Deciding my stop losses, I like to look at 0.5 as my first sort of target zone. And then 0.7 is where I'm really going to be tightening my stops if it goes that far. And then at one deviation, I'm taking some profits if I haven't already. If not even exiting and reversing at that point. Okay, so this is a very simple, very easy way to trade. Big thing is find one that's close to where the market's at. Find one where the ceiling or the floor. Okay, if you're buying the floor, all right. If you're selling the ceiling, and you'll know really quick. You don't have to even memorize this. If I click on sell, now I'm risking $13.50 to make $150. Obviously, that's not the right one. So I'll be one to buy on this one. Now, if I did want to sell, I could go over here, and there is a sell order I could do. Or I could, do 5 contracts. I'm risking $40, so I know I'm going the right direction on that trade. Okay, but you can buy or you can sell. You can buy and you can sell, so you can straddle the market before news and things like that. Okay, so that is the big advantage of doing that. And we got the S&P over here at 1438, and so on the Nadex, and so that's how Nadex works. That's how the box spreads work. Pretty simple. If you can trade the underlying markets at all, you can trade Nadex. All right, but now you can trade them with limited risk and with less capital. By the way, like an S&P E-mini, the best rates out there, $400, $500 margin for day trading. On this, if my risk is $150, I only have to put up $150 on my trade. So, or I could do one of them, right? So, and I can only put $30 on the trade. So you can trade with a lot less capital, a lot smaller one. Okay, and so that's how that works on the Nadex exchange. And that we focus here on the Diagnostic Trading Hour. And then now the other way to trade on Nadex is over here, and we're looking at the indices binaries. And we're going to look at US 500 and checking this out. And there's a lot of different things you can trade. But when we come back, we're going to wrap up and just show you how the binaries work. They're probably the simplest instrument to trade, and they're great to straddle with, in my opinion, that exist. Okay. And I'll show you how they work, and there's a good way and a bad way to trade, and we'll talk a little bit about that. Hold on right there. We'll be right back after the break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, welcome back to the Diagnostic Trading Hour here. And we were checking out Apple. It's starting to move on back up, so but they're holding off on that mini so far, it looks like, or the iPad Air is what the rumored name is. And so we'll see where that goes. Let's go ahead and check out the binary markets and see how the binaries work, okay? So on the binary markets, you want to go in, you want to do a trade, and you're looking at, we'll just say, the dailies. I'm usually looking at the dailies, unless I want to trade like the really small volatility on a flat day, then I love the like 2-hour ones, okay? So if I'm making more of a bigger trade, or trade in a short time frame, so you may go in and you may choose the 2-hour ones like right before a news announcement. But you're going to get a little further out, so you're going to get a little better pricing. I'll show you an example. So these right here, you have to have a pretty big announcement. Now, in this case, it'd only be 4 points, and you could have a nice profit. But you only have till 2 o'clock, so you have like an hour. But you have a nice risk-reward on a simple $4 move. And whereas you're not going to get that on the daily because you have until 4:15. All right? Now, the binaries are really simple. Every binary is worth $100. Okay? That's what they're always worth, is $100. So if your risk is $20, your profit potential is $80. If your risk is $50, your profit potential is $50. The sum total of the risk and the reward will always equal $100. All right? And a binary, what is a binary? Well, I mean, think about zeros and ones, right? It's a true or false statement. That's all it is. Okay? And, you know, the wrong way is to trade these and just like, you know, throw them out there and just hope you win. All right? There's a right way and there's a wrong way. But how do you trade them? Well, you go in and if you say buy, you're saying true. If you say sell, you're saying false. True and false to what? Well, to what the contract is. So go over here and you look at the S&P 500 will be September futures contract, the S&P E-minis, will be greater than 1442 at 4:15 p.m. Eastern Time today. Is that true? If you think it's true, you click buy, all right? And you'll notice right here, if I choose the quantity of 1, I'll see my risk is $9.50. Therefore, my profit potential is $90.50, or a total of $100. So I can make 10 times my money if I buy it for $9.50 and I hold it to expiration and it expires greater than, this is big, greater than 1442, okay? So what if it expires equal to 1442? Well, then a buy trade would lose. A sell trade would actually be the winning trade, okay? So equal to or less than is false. So true is greater than, therefore sell, false is less than. So let's say I thought it was going to go below 1433 before the day was over. I could sell it for $84, all right? And basically what that means is I'm risking $16, and it tells you down here. So if you're ever confused, you know, just hop over here, all right? And it tells you maximum profit $84, maximum risk $16, and that's all I'm risking is $16. And I can make a huge amount of money, great risk reward, if it closes, and I said false, less than or equal to 1433 at 4:15 Eastern. That's if I hold it all the way to expiration, okay? Which isn't that far away. I mean, it's, you know, a few hours away. So that's how a binary works. Now, you don't have to wait, okay, until expiration to be, you know, to get in or get out. You can do whatever you want to. You can get in before, after, whatever. And so I could go on here and we can actually look at the charts, and we'll check them out. We'll sort of see, you know, how they look. If I pull a chart up over here, if it'll work for me, and then I can see, you know, what would have happened if I would have bought or sold this binary. And what we'll do is we'll check out, let's see here. Let's check out this one right, this 50, the one that's at 50 right now. And sort of how it's been moving around. And it's always going to be right at $50, right around expiration. Or when it's right around where the market's priced at. And so I can sort of see, let's see, tighten it a little bit more. And we'll see that, you know, it started out last night, came in. Things moved from 30 to 70, back down to 30, back up to 70. So had some good volatility where you can take advantage of that and you could swing trade them during the day, or you could even trend trade them during the day. But just make sure, here's the number one rule on binaries, when you get in, immediately set a take profit order for getting out. So that way you're not holding to expiration, you lose by a tick and then you lose everything, okay? So y'all have a great day. Hope you enjoyed this. We're going to have some fun tomorrow with the Fed funds rate. And I'll see you tomorrow, 12 to 1 Eastern. Make sure to check out those seminars and the Tiger Dollars before the offer expires.